Hello and welcome into the KE Report. I'm your host, Shad Markowitz, and today we're getting an update on Blackrock Silver, traded on the TSX.V under the ticker BRC, and on the OTCQX under the ticker BKRRF. And I'm joined today with the president and CEO of Blackrock Silver, Andrew Pollard. And Andrew, always great getting you on the show to get an update on Blackrock, and excited to get together today to talk about some drill results that you put out to the market just on November 21st. Now, these are some more high-grade gold and silver assays, really from the Merton and Bermuda vein area, where the bulk of the resources are at your Tonopah West Project in Nevada. And you've got some high-grade areas in here, some nice intercepts, wide over a meter, sometimes almost 2 meter intercepts, sometimes even some sections that are 5 meters. So walk us through some of the key takeaways from both the silver and gold intercepts in these areas that you just pulled out of your exploration program, really infilling some of the areas that you wanted more density in.
Yeah, no, it's great to be back here. Listen, this is our most active drill campaign we've endeavored on in the last couple of years, and it's really two-prong and focus. We put out our first PEA on the project, 4 years after our first discovery hole into it, and that PEA outlined two main things. I mean, beyond the 8.6 million silver equivalent ounces that it's going to be producing annually at sub $12 all-in cash costs. And those two things we're trying to address this year with our drilling and into next year too, is to de-risk through the early years of production. So we want to take the PEA outlined a 2.3-year payback period. So what we're trying to do right now is focus on drilling out the first 3 years or so of anticipated production. And that's the results that we've been releasing since October, trying to establish continuity through the early years on 25-meter centers and really define the high-grade ore shoots. The other thing that we're focused on concurrently as well is backfilling mine life. So the PEA outlined an 8-year mine life. What we're trying to do now is backfill a mine life on the back end of that, adding on a whole lot of really prospective ounces that we see across a 1 kilometer trend, a gap that remains between two of our key deposits, which are our DPB area and our Northwest Step Out area, which is 1 kilometer away on the exact same vein corridor. So the results we've released thus far are, as you said, on our Merton and Bermuda vein systems. And why we're targeting those is these are the first areas you'd access once you go underground. So these represent the early years of production. And I mean, we've put out 27 assays so far from this ongoing program. And not only are we establishing exceptional continuity of the high-grade ore shoots, we're getting a real good handle on the plunge and really defining those high-grade zones, hitting some of the highest grades we've ever seen at the project. But we've also hit a whole lot of mineralization outboard of the existing PEA and resource shell towards surface. So, right now it's looking like we're tracking three different, very well-defined high-grade shoots. Starting from about 140 meters below surface, we've got another one defined around the 200, 220 meter level, and another one coming together around 300 meters or so below surface. And what's significant about that is the current mine plan envisions mining starting around 200 meters below surface. So we're actually bringing a whole lot of really, really high grade new tons into the picture near surface. So not only are we going to be striving to backfill our mine life on the back end, but it's looking like we're going to be adding a significant amount of mine life to the front end too, as we'll be hitting those high grade zones even earlier than anticipated.
Nice to see you adding mine life to the front end and the back end of the project, Andrew. Let's dive into the grade profile a bit more, though, because I think one of the distinguishing factors for Blackrock Silver is the very high grade nature of this deposit, because this is the highest undeveloped 100 million ounce plus silver equivalent deposit that there is on the planet for investors to look at. And it looks like you're even raising the grade profile even further. Would that be the case with some of these holes based on the way the grades are coming back in?
For sure. And you've got to speak in silver equivalent. So 100 million ounces, yeah, it's definitely a standout in the industry. I mean, if you look at the head grade that you're mining at Tonopah West, there's nothing else like this amongst the developers in the silver space. We're 55% higher head grade than our next closest peer comp in the industry right now. And that's just based off our inferred drilling. What we're seeing right now, especially with the M&I conversion that we're doing, is we're hitting grades even higher than what's laid out in our existing resource. I mean, the early years, I mean, people can dig through the technical report themselves, but in the early years, you're mining a stope that is laid out at being around 980 grams per ton silver equivalent. So just shy of a kilogram per ton silver equivalent that you're actually mining. Once again, I mean, obviously, in mining, grade is king, and the queen of the silver camps, which is what our Tonopah West project, the area, the Tonopah Silver District that it lies in, its veins run a royal blue at this point. So what you'll see is when you put out inferred resources, you tend to get a little penalized just because of the drill spacing and how those resource calculations are done. But as you just fill in the gaps and tighten up the spacing, which we're doing right now, just assuming you're hitting grades similar to what the inferred drilling has shown thus far, then you're going to see the M&I grade ratchet up measurably. But what we're seeing from our drilling is we're hitting grades substantially higher than what we've seen thus far. So I expect our M&I grade to ratchet up quite significantly. What that should allow us to do is not only lock in these high grade tons on an M&I basis, but the average grade of that should raise significantly too. And that's going to have a huge positive consequence with respect to seeing our payback period fall down because you're mining higher grade material. We're getting a real good definition and handle on the plunge of these high grade shoots. As I said, right now we're tracking three different zones, on these vein systems here. And I don't know what it's going to work out to be, but I'd be shocked if it comes back any lower than what's laid out there. So I think it's just going to be very, very positive for the project to bring new high grade ounces into the mix in addition to converting what we already know is there with a higher confidence.
Yeah, raising the grade profile, but also more higher confidence ounces, moving from inferred to measured and indicated, helps the economics. It should help the payback period, like you say. You're also looking at extending the mine life. But let's also talk about some of these areas, this especially this gap zone between DPB and the Northwest step out. This area needs more drilling density. Now, you haven't been releasing those holes yet, but maybe talk to people about some of the holes that you put in that area and what the goals are there.
Yeah, for sure. Well, listen, we've got, this is the unmined extension of a district that produced right around 400 million silver equivalent ounces over the span of, say, 30 years in the early 1900s. And we're literally picking up right from where the last historic mine operated. And we've now drilled out, as the crow flies, about 4 kilometers of mineralization along this exact same vein corridor. The M&I conversion program, I think the fact that all of our ounces were inferred has held our valuation back, as I think there's a bit of skepticism whether it hung together. But from our perspective, that was something that never really was much of an issue simply because, I mean, we're seeing the same sort of continuity that the old timers pulled out, this time 100 years ago. But at least we're locking that in now. The real upside we have is to grow the mine life materially just in the next 12 months or so with the drilling we've got laid out along this 1 kilometer gap in the vein zone. So if you take, as I said, we've drilled out roughly 4 kilometers of this mineralized vein corridor, but internal to that, there's some fairly large gaps that we've yet to link up. And what we're doing right now is we're linking up 1 kilometer of that vein corridor with expansion drilling that's underway right now. We didn't start drilling that 1 kilometer extension until mid-September. So I believe we've got 6 or 7 completed holes in that area, fairly widely spaced, but that's going to start, I guess, giving credence to our model. And if we're successful there, we see potential to add another 30 to 50% in terms of new high-grade tons. Not only that, one of the things that we did with respect to our PEA is we actually excluded 12 million ounce deposit that we call Northwest Step Out from this mine plan. And because there's that kilometer gap separating it from the DPB and Victor areas. And, if we're successful on this drilling that we're doing right now, not only will we bring on a substantial amount of new tons, new ounces, but we'll be able to get to that 12 million ounce satellite deposit and bring that into the mix into our next mine plan too. So we're not just at random ounces here or there. These are ounces, these are tons that bolt right onto the existing conceptual mine plan that will get us to that other 12 million ounce deposit, which it gives us the potential to seriously blow out our mine life by the time we get to our next study with the drilling that we've got done. So, in terms of, catalysts to look forward to, yeah, we've got a whole lot of M&I assays still in the labs working their way through. But next up on the docket will be the first of these expansion holes. And if those hit, then buckle up.
Yeah, Andrew, I'm glad you brought in the orphan 12 million ounces that you didn't include in the last PEA at the Northwest Step Out. So again, you fill in this gap zone, you bring those into the fold. Again, you're bringing in more ounces. You're also extending the mine life like we've been talking about. But I'm assuming that all this is going to tie into a updated resource at one point and an updated economic study. Will you just update the PEA, or because these are moving to M&I, is that setting you up for the PFS?
Yeah, what we're focused on now is getting all the drilling we want to get done, link up that 1 kilometer gap. The M&I conversion program, all of that drilling will be finished by, the first few weeks of January. And, that's with us adding, I think, an extra 8 holes to that program to follow mineralization up dip. And we're trying to link it up to another intercept we made in 2021, I believe it was, about 200 meters away. So the M&I component of this program is going to be done imminently. And then the expansion drilling, what we're going to do is we'll have, we're going to finish the year with with at least $8 million left over in the treasury. We're in a really, really good position. So what we're going to do is, as results from the expansion program keep rolling in and lay credence to, I guess, our targeting across that 1 kilometer gap, then we're going to be very active on the drills to start 2025 through Q1 and Q2 and just keep tightening up that drill spacing there. And then we'd roll that into a new PEA, incorporating it, well, effectively taking our three deposits and turning it into one giant system. That would, we'll do a PEA first. I think simply because I expect the site layout to change as the center of gravity for the mine continues to move to the northwest. It may change, where we decide to put the dry stack tailings and the process plant and all that good stuff. So, it's still, the PEA we put out in September, that was done in pencil, not pen. It gives a good economic case for, what it will cost to build a mill, the 1,500 ton per day mill and the process plant and the CIL circuit and all that. It shows what it'll cost to go underground. But a lot of that site layout and logistics may change as the center of gravity moves. So we're just going to keep refining our understanding, de-risking our ounces, and blowing out mine life. And then, I think this next step after that would be to look at going underground and getting towards the really exciting stuff like big bulk samples and then from there, that's where the rubber would really hit the road and looking to more detailed engineering studies.
Okay, so you're still going with the PEA first because, again, like that site layout changes, you'd want to save that for the PFS. You did mention that, you're shifting to all the expansionary drilling. We've talked about the gap zone. Are there any other areas for expansion and for step out that you want to highlight? Because I will include a map that people listening in can see visually where the kilometer zone, this gap zone between DPP and the Northwest is, where the vein corridor is. But are there any other areas on the map that you would highlight as far as step out or expansionary drilling?
Well, listen, we've still got a lot of meat that remains uneaten on our plate. And when I say meat, I mean, high grade tons that'll bolt right onto the existing conceptual mine development, which should make for very, very economic ounces should we be successful there. So we're not really focused on chasing potatoes elsewhere on our property or up onto our BLM claims right now. I mean, what's really, really nice about our project, aside from the grade profile and the what's projected to be some of the best economics in the industry, is the fact that the entire mine sits on private land, patented claims. So this is going to be a very truncated permitting process. This is something that could be driven forward very, very quickly. We do have some other really good targets. As we'd strive to track mineralization up around the caldera margin to the northwest, but a lot of that would fall on BLM lands, and that falls pretty low on our priority levels here. I mean, as long as we can keep adding low-hanging, high-grade ounces that'll bolt right onto our existing mine plan, we're going to keep doing that because that's going to be the best return on investment and allow us to really drive this forward aggressively. But there are always more targets. We've got some zones There's a wedge zone that's faulted out between our Victor and DPB deposit where we'll probably look to find the offset of that system there next. But once again, we've got a very, very clear path to add. In the next 12 months, I think we'll add more ounces quicker and cheaper than any other point in the company's history, just given how predictive the model is. And, we've got anchor points bookended with mineralization along this vein corridor on both ends. So right now we're just going to put our head down, do the hard yards, lock in our ounces and drive it forward there. And then after that, we'll figure out what the next targets would be. I mean, the other thing is, this is a project that's not only going to grow along strike, but it's going to grow in 3 dimensions as well. We haven't found the bottom of it anywhere, and where we think we'll be able to test just how deep the plumbing, the roots go on this thing. That'll happen once you're underground and have access to those older workings and can really keep following it. So, there's potential that ounces any which way you want to look here. But for now, I think the next year, the next 12 months or so is just us focused on tying everything together, breaking it one big mine plan and blowing out our next study.
All right, Andrew. So, like you say, focused on bolt-on ounces, the meat that you can put on the meal, and then there are still some potato targets out there regionally. But you brought up an interesting point about, the different types of land position in Nevada and how that would tie into permitting. There's always a focus now on projects and what the pathway to permitting looks like. Could you just put just a little more color around the lands that you're on, the advantages you have, where some of those other targets may be, and how the permitting process would work for both?
Yeah, well, listen, being on private land is a huge advantage in the sense that you're not dealing with the federal government whatsoever in terms of the permitting process. It's just state and county level permits required. So, the nice thing about having the mine plan now is we've got a good handle on requirements in terms of water, in terms of energy consumption, all of that. And we can start using that knowledge as a roadmap to kickstarting, the baseline studies that would be required for your submission to the regulators when that time comes. But the biggest piece of that puzzle is having a mine plan settled to submit to regulators. What I can say is that, once we're in a point where we've got a mine plan sorted and once we've got the baseline studies, those are things like air quality, water, rock characterization. Once you have all of that done and you've got your mine plan settled and you want to submit it to the regulators, you're looking at the turnaround time of something that would be 12 to 18 months, not 12 years. Granted, Nevada is a good place to be anyway, but, following the election and the Trump administration coming in, I think as compared to the rest of the world, America is now seen as open for business. And that doesn't really affect our project all that much. It certainly does affect sentiment as it relates to just being a mining company in general in America. And it does also pave blue skies in terms of those projects that sit on BLM lands, which we do have a large land package directly that bolts onto our Tonopah West Project to the north, and with Doug Burgum being floated for Secretary of the Interior, which has oversight over BLM and all the federal lands, I'd expect permitting for all those sorts of projects to be streamlined as well moving forward. But for us, one of the best things about our project is it really didn't matter who won because it's state and county, and it's very, very, this is a project that can be driven forward very, very quickly.
Yeah, Andrew, I think it's such a key point about being on the private land. But like you say, maybe under the Trump administration, even those BLM lands come into focus as just expansionary upside for the company. I guess just as we wrap up, obviously you still have a lot of drill results to put out to the marketplace, and we're going to keep our eyes peeled for that. But summarize where you think Blackrock Silver sits in the spectrum of silver companies available to investors, and playing to your strengths while you're in such a unique situation with the resources and the economics you already have, but you're really layering it on with this particular program.
Well, listen, at 8.6 million silver equivalent ounces, it's a sub $12 all in cash cost. This is a production profile that'll move the needle for just about every silver company in the world and most gold companies too. This production profile that we're outlining lines up very well with what Silvercrest does at Las Chispas. I think they're doing 10 million ounces at 12.50, $13 all in cash costs, and they just got taken out for $2 billion. I'm $120 million market cap, and we've got potential to bring this into production with a lower all-in cash cost than even they do. So there's a huge valuation gap. But as we de-risk our ounces, as we establish continuity, as we do the hard yards in driving this forward through development, this company, this project has $1 billion potential on it. Assuming everything comes together according to plan. And I think what's going to be meaningful is really just taking our mine life, well beyond that magic number, which is 10 years. And we see that potential. We see huge potential to do that in just the next 12 months or so. You know, One of the nice things about putting economics out on a project and establishing ourselves as one of, maybe a handful of true silver development stage projects is that analysts actually sort of have to start covering us now. And we actually just saw that this week. Raymond James initiated coverage on us, which is helps to raise the prominence for both the company and the project, especially given their huge US platform as well. And what that creates is just more advocates in the market, people, groups that go out and speak to the large institutional holders every day who are looking for new ideas. And one of the things that they cited in their coverage report, which I think just came out after market on Monday, was the M&A appeal for us because we're in America, because of the grade profile, because of the robust economics. So we do have a big target on our back. And, silver industries, it's not a swimming pool, it's a hot tub. And, our project right now, with all of being on private land, with no permitting overhang, with the high grade nature of it, I mean, there's nothing else like this in the industry at this point. So, for once in my life, I'm the pretty girl in the hot tub here. And I think there's a lot of people that are going to be paying attention. And I wouldn't be surprised to see other notable analysts jump in with both feet too over the near future here.
Well, Andrew, that's quite a mental picture there. The pretty girl in the hot tub, but the point is well stated.
2024.
The point is well stated that it's not a big pool of companies that have economics out that have such robust resources or have such a big grade profile. So you very much could be a takeover target. But I think a lot of people are excited to see the re-rating potential here as you tie this all together with this year's program, update the resources, update the economics next year. So a lot to follow along with for news flow from Blackrock Silver. And for those listening in, if you want to follow along with the news, definitely click on the link below this interview. It takes you right over to the company website, straight to their news section, where you can also sign up for news updates, and you can follow along with Assays as they hit the marketplace. Andrew, keep us posted as you got more updates. We'll get you back on for an interview again here just in a short little while. And as always, looking forward to our next conversation.
That sounds great. Thanks very much.